And in our top business story, Dubai continues to be the most dynamic city within the Middle East for a second straight year in a global survey, which ranks cities based on their real estate dynamic as well as related socio-economic factors. In the City Momentum Index, put together by the real estate consultancy JLL, Dubai in the overall global chart slipped from 3rd spot to 13th, a decline brought about by the marked slowdown in its property market since the second half of last year. London was ranked first globally, followed by San Jose, Beijing, Shenzhen and Shanghai. Apart from trends that show up in a city's residential and commercial space, the other considerations the index takes into account are the speed of change of a city's economic base. That would include air passenger traffic growth rates, the presence of new businesses and the ease with which they do so, as well as the levels of foreign direct investment a city attracts. While the slower pace of growth of its property market explains the dip in terms of Dubai's rankings, the longer-term picture retains its buoyancy. According to the survey, a subdued rental market will offer some welcome breathing space for the city's residents, as well as its corporate tenants, with fears that if the slowdown had not taken place last year, it would have created an unsustainably hot property market. The UAE continues to be a vital trading partner for many countries around the world that are looking to capitalize on the market, which is increasingly becoming a global hub for food exports, witnessed through a large international participation at the ongoing Gulfood. More than 4,800 exhibitors from 120 countries are taking part during the 20th edition of the Gulfood, with many seeking to increase trade volumes with the UAE, particularly considering industry estimates of food consumption in the country to be valued at 40.8 billion dirhams by the year 2018. Pakistan is one of the countries with ambitious campaigns for improving trade ties, as according to the figures from the Trade Development Authority of Pakistan, the country's exports to the UAE reached $1.75 billion, of which food represented the largest share. Around 42 companies from Pakistan are currently exhibiting at the Gulfood, predominantly exporters of basmati rice, frozen meat products, cooking oil, spices and confectionery items, to name a few. Speaking during the tour of the pavilion, the chief executive of TDAP stated that the rapid expansion of the UAE as a global food hub represents a vital opportunity for Pakistan to enhance their trade volumes. This year, they've subsidized 50% of the costs for exhibitors to be present at the event, as they aim to increase food exports to the UAE to reach $1.2 billion in the coming years.
Time has come that we have to take care of our exports. We should not be depending more and more on IMF. Pakistan must be depending more and more on our own export. In Pakistan, we have got everything. You think of anything to eat is available in Pakistan. We don't import, we export. We export rice. Pakistan is now the second biggest exporter in Pakistan is rice item. Rice is $2.5 billion. Our total export is $25 billion, which is very small. We want to increase the export. So under the dynamic leader of Prime Minister of Pakistan, and we are working day and night to increase the export of Pakistan. I foresee big future of Pakistan, and I'm definite Pakistan will do a big jump in export of the country.
Although the construction and service industries remain key sectors for many European countries, the regional director of the Welsh government stated that food exports are increasingly becoming crucial, particularly with the growth of the hospitality industry. With trade volumes between Wales and UAE reaching £2.2 billion in 2013, it was added that food exports could increase by 30% in the coming years.
When we first started, before we opened the office, we were doing something like £350 million worth of export business to this region. In 2013, 10 years later, we're doing £2.2 billion. So it's been a significant increase in growth, say putting UAE as our third largest export market worldwide after the US and Ireland. Running up to 2020, we're going to see more hotels, we're going to see more outlets, we're going to see bigger supermarkets, and we anticipate growth to put a figure on it. I couldn't say, but probably 10, 15, 20% growth over those coming years. So, and a lot of that depends on growth of the market here, the demographics of people, and how the population grows as well. But we see our products going into all of those outlets, into supermarkets, into the new hotels and restaurants and bars. And so yes, there's a big demand for it, and that will continue to grow.
Indians have invested 44 billion dirhams in Dubai's real estate market in the last 3 years, including 18 billion dirhams in 2014 alone. Looking ahead, the Emirates property market is likely to be a beneficiary of the Reserve Bank of India's move to increase the amount Indians can invest or spend abroad in foreign exchange without seeking its permission. The bank now allows Indians to buy property abroad, hold shares or debt instruments or any other assets or purchase gifts up to the limit of $250,000, the equivalent to 917,500 dirhams per person per year. The earlier limit under the liberalized remittance scheme was $125,000, but in 2013 it was reduced to $75,000 as the rupee slumped. It was set back at $125,000 in June 2014. After the decision, residential sales declined by about 30% in 7 major Indian cities during 2014, and the decline was particularly steep in the national capital region. Dubai has always been the favorite choice of property investment for Indians because of its location, tax-free regime, high rental yields and capital appreciation. Additionally, the real estate consultancies Knight Frank and JLL having forecast prime properties in Dubai to fall between 5 and 10% during this year. The entry price into the market is now seen as more attractive to possible Indian investors when compared to the cost of investing in major cities in India. And Dubai's Damac Properties has proposed a 10% bonus share issue equivalent to 500 million dirhams for 2014. According to a board statement filed with the Dubai Financial Market today, the developer stated that the bonus share issue was recommended by the company's board of directors and will be taken up at the annual general meeting, which will be called late next month. In the statement, Hussein Sajwani, Damac's chairman, was quoted as saying that as we embark on a new and exciting journey as a listed company in our home city of Dubai, we look to solidify our position and drive growth for our homeowners and shareholders, adding that the company has a firm belief in Dubai's fundamentals and see the market maturing and continuing to grow in the coming short to medium term. The company had earlier reported a net profit of 3.48 billion dirhams for 2014.